Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. For your information, basic accounting knowledge stated that liabilities when added with equity are equal to assets. This can be found in balance sheet, which is one of the financial statements that must be prepared by every organisation, including Islamic banking sector, at least once a year. In this discussion, 3 Islamic banks are chosen to analyse and compare the financial statements from 3 different years. We choose financial report from Hsbc Amanah Malaysia, Ocbc Al-Amin and Rhb Islamic Bank in 2018, 2019 and 2020. Throughout this presentation, we will discuss the purpose and importance of the type of assets and liabilities, the monetary size of comparison of the asset or liability, the risk that the bank run due to the exposure of each liability, and methods or instruments that bank use to hedge the risk pertaining to these types of liabilities.
Now, we move to assets. The purpose and importance of the type of assets. First is cash. Cash is the most liquid asset. It utilized right away to execute economic operation. For trade securities, securities purchased by a firm for the intention of making a quick profit. It only invests if the company adequately compensated for the risk. For interbank financing, it well-functioning and efficient banking system. It also to smooth out temporary liquidity shortage and reduce funding liquidity risk. For investment securities, it is bonds and shares purchased for financial purpose. The goal is to profit from the periodic interest and dividend payment. For loans and financing, a sort of borrowing that is based on a company's assets, which is have two purposes. Firstly, to secure the use of assets and securing funding through a loan. For statutory deposit with central bank, it has a considerable impact on the operation and earnings of member commercial banks. And lastly, for other assets, it is collection of accounts that is displayed as distinct line item in the balance sheet asset section. For monetary size of asset compared to the total assets of the banks. Firstly, for cash, the highest cash is Hsbc Amanah Malaysia. The percentage of cash compared to total asset was 27.55%, and the total cash in 2018, 2019 and 2020 are 2.8 million ringgit. For interbank financing, the highest is Hsbc Amanah Malaysia. The percentage of interbank financing compared to total asset was 4.76%. The total in 2019 and 2020 are 187,000 ringgit. For trade securities, the highest is Ocbc Al-Amin with 7.41% compared to total asset. The total in 3 years are 36,000 ringgit. Next, for investment securities, the highest is Ocbc Al-Amin. The percentage of investment securities compared to total asset was 0.26%. The total cash in 3 years, which is 2018, 2019 and 2020 are 12 million ringgit. For loans and financing, the highest is Hsbc Amanah Malaysia. The percentage of loans and financing compared to total asset was 1.03%. For other assets, the highest is Ocbc Al-Amin. The percentage of other assets compared to total asset was 5%. The total other assets in 2018, 2019 and 2020 are 246,000 ringgit. Lastly, for statutory deposit with the central bank, the highest is Hsbc Amanah Malaysia with 0.02% over the total assets. The other two banks got the same percentage, which is 0.01% each.
Besides that, the risk that the bank runs through the holding type of asset is credit risk, liquidity risk, and market risk. Credit risk of loan service costs by the inability of customers and counterparties to meet their financial and contractual commitments to the bank under the agreed conditions. While the liquidity risk is the risk that the bank will not able to get sufficient liquid asset to pay its financial commitments and obligations when they become due and to the asset at a fair cost. While the market risk also is a market risk of losses resulting from the adverse changes in the market indicators such as profit events, credit spreads, equity price, currency exchange and commodity price, getting traded portfolio and certain exposure in the banking books.
Alright, the last part in the asset, which is about the method or instrument that bank use to hedge the risk pertaining to the type of asset. Hsbc Amanah Malaysia or Ocbc Al-Amin and also Rhb Islamic Bank have similar methods which use profit rate swaps to hedge against profit rate risk. To hedge fixed profit risk on financing advances, the bank employs fair value hedge accounting. Fair value hedge accounting does not change the way gains and loss on derivative and other hedging instruments are recorded, but it does result in the recognition of changes in the fair value of hedged assets attributable to the hedge risk. By restricting an exposure to particular currency and on aggregate basis, the bank manage foreign currency risk within the trading portfolio.
The liabilities. For the purpose and importance of the type of liabilities, firstly we will discuss about customer funding. Customer funding is a commercial arrangement between a vendor and a customer in which the customer agrees to supply the vendor with some level of upfront funding prior to the product or service being delivered. The vendor will benefit from early cash flow which may be used to fund product development and eliminate the need for as much external investment as possible. Next is interbank deposits and placement. It is referred to a partnership between two banks in which one retains funds in a separate account for the benefit of the other. It can assist banks decrease funding liquidity risk by allowing them to get loans promptly and at low cost. Next is repo obligation. Repo obligation is referred to commitments under buyback agreements and other contracts that give a transferor the right but not the obligation to repurchase or redeem financial assets before their maturity date. The repo market enables financial institutions that own a large number of assets to borrow inexpensively.
Financial liabilities. Any future sacrifice of economic gains that an entity is compelled to make as a result of its past transaction. The entity's future sacrifice can take the shape of any money or service owed to the opposing party. Bill and acceptance payable. A bank's debt to others bank, usually a central bank. These are short-term interbank loans secured by a collateral that includes a promissory note from the bank and pledge of government asset. This serves as a safety net, ensuring that depositors have enough liquid cash on hand to withdraw. The next is borrowing. Getting a bank loan is one of the most common ways of financing startup capital and large, long-term processes, therapy enabling banks to spread funds in various directions or across various investments. The last one is subordinate obligation. Any obligation of the company, whether outstanding on closing date or thereafter incurred, that is junior or subordinated in right of payment to the securities. Now we will discuss about the monetary size of liability compared to the total liabilities of bank. First, customer financing. The highest customer financing among the three banks is Ocbc Al-Amin. The percentage of bank customer financing to total liabilities was 91.57%. while for Hsbc Amanah Malaysia is 50.53% and Rhb Islamic Bank is 88.59%. Second, interbank deposit and placement. The total 3 years deposit and placement of Hsbc Amanah Malaysia is Rm 7 million. It ran from 2018 to 2020. The percentage on total liability is 50.53%. It is the bank with the highest percentage of interbank deposit and placement. The third is financial liabilities. The percentage of financial liabilities over total liabilities for Hsbc Amanah Malaysia is 1.04%. Ocbc Al-Amin is 0.11% and Rhb Islamic Bank is 0.99%. This show that the highest percentage among the three banks is Hsbc Amanah Malaysia. The fourth is bill and payables receivable. The average percentage between the three banks is between 0.02% to 0.90%. Hsbc Amanah Malaysia is the bank with the highest percentage, with a total percentage on total liabilities being 0.90%. And the last one, subordinate obligation. The highest average percentage is Hsbc Amanah Malaysia, which is 3.80%.
Next, among the risks that the bank face when exposure to liability is liquidity risk. Liquidity risk refer to inability of a bank to meet its obligation, which has a negative impact on its financial standing and even its very existence. The inability to provide money can cause a negative feedback loop. This reduces the bank's ability to give funds even further, resulting in a bank run. So when asset liability duration management, it can lead to financial issue. A bank's asset liability duration may be mismatched if all or most of its assets are invested in long-term loans or investment.
Every organization come up with different instruments to hedge risks that occur in managing liabilities. As for these three banks, derivative financial liabilities is used to comprising forward contracts for the acquisition and sale of foreign currencies, financial future, option contracts, also profit rate, and currency swaps. This instrument tolerates bank and its client transfer, modify or reduce their interchange and profit rate risk. Hsbc Amanah Malaysia has proposed the global liquidity solution that allow customer to have access to a range of self-funding, deposit and investment technique. It is due to this restriction with local market regulation that limit the availability of some services, which is cash concentration, deposit account and profit enhancement. This alternative enable bank to arrange services and integrate a top level of consistent service and information.
There are some criticisms that have been found regarding the Bank of Hsbc Malaysia. In September 2021, the UKNCP had considered to accept a report made by the National Bank of Employees, or known as UB, and the Uni Global Union. Both of these organizations also have implied that certain Malaysian employers had violated the labour laws, employees' rights and welfare. Furthermore, another complaint made by them is that the Hsbc Bank Malaysia purposefully delayed collective bargaining discussions, harassed and victimized newbie members. Furthermore, they also stated that the Hsbc Bank had denied union members admission to work and meetings and failed to participate in dispute resolution procedures with newbie and outsourcing processes, and in turn it had resulted to the job loss. On the other hand, we have found some criticisms related to the working field by the experienced worker. First, a customer service banker who had worked there for more than 12 years stated that the system of the bank had changed drastically due to the pandemic COVID-19, and thus they are struggling to adapt to it. Next, the second review is written by Hsbc's head of compliance that stated working there really requires a high KPI.
Furthermore, various criticisms of Rhb Islamic Bank have been made by the Malaysian community in relation to some of the flaws that they have observed. There is a problem of selling price in the refinancing of housing at Rhb Islamic Bank.
and there are parties that claim that Rhb refinancing this home is the same as the Rhb Al-Amin contract. It can also be characterized as a sale and buy agreement followed by repurchase by the seller at a different price in a Rhb Al-Amin contract. Although the ulama have argued whether the Rhb Al-Amin contract is permitted or prohibited, it remains a point of contention among many parties. This is because, according to a study conducted by Rhb Islamic Bank, Rhb Al-Amin is not a legal contract in Islam and should not be used in their goods. When the subject of Rhb Al-Amin arose, however, many people questioned Rhb Islamic Bank's stand on the matter.
One of the criticism of Ocbc Al-Amin Bank Berhad is that asset quality remains poor. This is due to the recent increase in COVID-19 infections and prolonged closure, adding to the risk of decline. Bank retail books, where the share of Tier 2 loans was large at 20.3% at end March 2021, partly due to the initial downgrade of most retail loans under repayment assistance. This matter needs to be addressed immediately with good and effective planning when faced with an epidemic such as COVID-19. This reconfirmation proposal needs to be implemented based on the expectation of existing parental support from Overseas Chinese Banking Corporation Limited, if necessary, given the strategic importance of the bank to the latter.
Based on the above criticism, it is clear that the three banks have their own problems, especially performance problem. The problem is something that often happens to every bank, but the management of the bank is responsible to address the matter as best as possible in order to continue to gain trust of outsiders and even investors. They need to be prepared early in case something undesirable happens like bankruptcy and so on. Nowadays, the event that has shocked the world is the epidemic of COVID-19 that hit the world, and Malaysia is no exception. It has affected several sectors, and these include the financial sector. Since COVID-19 hit Malaysia, there has been an economic crisis, and banks have also suffered many losses. Therefore, the banks such as Hsbc Amanah Malaysia Berhad, Rhb Islamic Bank and Ocbc Al-Amin Berhad have planned several new things to address their problem in terms of performance. Apart from that, it can be concluded that each bank has its own weaknesses and advantages in terms of performance of all service to their employees. But the thing that needs to be considered is in the terms of the way they handle performance such as asset and liabilities.
In the conclusion, during the economic upturn, the financial industry tended to show greater risk in accelerating management. According to an examination of balance sheet calculations of the three banks in Malaysia, various variation can be seen with economic crisis. In the Malaysia financial industry, moral hazard is evident since the most material balance sheet items move in a risk-free way only after the bank in Malaysia implements conservative measures. That's all for us.